All right, welcome back, everyone. Today we're taking a deep dive into Schneider Electric Infrastructure's Ltd. We got their Q2FY25 earnings conference call transcript, and it seems like they're doing some pretty interesting things, especially here in India.
Yeah, they're definitely a major player in the energy management and automation world. What really stands out to me is how forward-thinking they are, especially when it comes to sustainability and these newer, faster-growing parts of the market.
Oh, for sure. It's not just lip service either.
Yeah.
They're putting their money where their mouth is with all this electrification, automation, and going digital. And it seems like they're all about building strong partnerships, too. They kept mentioning working with customers beyond just the initial sale throughout the entire product lifecycle.
Smart move, honestly. It's not just about selling a product. It's about really becoming a partner, understanding the customer's needs and supporting them every step of the way. That approach, combined with their growing network of partners, puts them in a great position for growth.
It seems to be working. They highlighted some pretty impressive success stories, showcasing how their solutions are solving real problems. For example, in the oil and gas sector, they're providing those full-stack solutions with sensorized transformers and digital elements, basically giving companies a way clearer picture of what's going on.
Exactly. It's about giving their customers better visibility, optimizing control, and making maintenance easier. And this impact isn't limited to just oil and gas. They're making waves in other industries, too.
Yeah, like the steel industry. They implemented that remote racking system, which I guess lets technicians connect and disconnect electrical equipment remotely. Not only does that improve safety, but it also reduces the downtime for maintenance, saving companies a ton of money.
Oh, and their work in the mobility sector caught my eye. Supplying those controllers and control systems for that big metro project in Southeast Asia really shows how India is becoming a technology powerhouse globally.
Right. And let's not forget about their move into the automotive world. Supplying those sensorized solutions with a subscription package, they call it URI, I think. That shift towards a subscription model is intriguing, offering customers more flexibility and potentially creating a steadier stream of income for Schneider.
It's a win-win. Customers can access the latest technology without a huge initial investment, and Schneider gets a more predictable income. A pretty savvy move in today's market.
Okay, so they're clearly addressing specific challenges in different industries. But one thing that stuck with me was their focus on a major concern: fires in electrical equipment. Their new partial discharge detection technology sounds like it could be a real game changer.
It's a very proactive way to manage risk and safety. Rather than waiting for a fire, they're using sensors to catch those potential issues early on. Imagine its sensors constantly monitoring the equipment, flagging any unusual activity that could indicate a problem. This lets companies address the issue before it leads to a fire, or, worse, a safety hazard.
That's got to be a huge relief for companies working in those high-risk environments. It's almost like an early warning system for their electrical infrastructure.
And, besides preventing fires, this technology can also help equipment last longer, reduce maintenance costs, and just contribute to a more sustainable operation overall.
Speaking of cutting-edge tech, I was blown away by their use of augmented and virtual reality. It sounds like something straight out of a movie.
I know, right? Picture an operator using a tablet and getting real-time, on-screen guidance for troubleshooting or maintenance tasks. It's basically like having an expert looking over your shoulder no matter where you are.
And it's not just about on-the-job support either. Imagine how this tech could change training. Interactive simulations, remote demonstrations, personalized learning experiences. Technical training could become so much more engaging and accessible.
Totally. It's a game changer, especially for industries that rely heavily on specialized knowledge and skills. Plus, it could reduce the need for travel, which is great for both the environment and the budget.
So they're really pushing the limits of what's possible in energy management and automation. But let's be real, all this innovation isn't cheap. So how are they doing financially?
While their financials paint a pretty optimistic picture, they reported a 17.5% increase in orders year-on-year, hitting INR 1,400 crore, which shows strong demand across all their segments.
And it's not just about getting those orders, it's about turning them into revenue, right?
Absolutely. And on that front, they're crushing it. Their sales are up a whopping 20.3% year-on-year, reaching INR 11,193 crore. This really shows how well they're executing their strategy and getting results.
Wow, 20% growth is impressive, especially considering the current economic climate. What's the secret sauce here?
Well, a few things come to mind. Firstly, focusing on those emerging segments we discussed earlier, data centers, EV infrastructure, and renewable energy is really paying off. These are the areas with skyrocketing demand, and Schneider is right there to ride that wave. Secondly, their focus on modernization, digital services, and remote asset monitoring is resonating with companies who are looking for ways to optimize and boost their efficiency.
So they're not just following trends, they're actively shaping the energy landscape with solutions that actually solve problems.
Precisely. And this customer-focused approach is clearly reflected in their profitability, too. A 67% jump in PBT and a 32% rise in PEAT year on year is nothing to scoff at. It shows they're not just growing, they're growing profitably, which is key for a sustainable business model.
That's reassuring, especially with the global economy being so unpredictable. Many companies are struggling to keep those profit margins healthy.
You got it. And it really shows that they're managing their costs effectively and pricing their products and services competitively. Plus, their order backlog is up 14.3% year on year, which is a good sign.
It's a pretty healthy pipeline of future business, suggesting that this growth isn't just a fluke.
Exactly. It indicates that they're building a solid foundation for sustained growth. This isn't just a flash in the pan.
A robust order book and impressive revenue growth are fantastic. But what about their overall financial stability? How's their balance sheet looking?
The balance sheet is looking pretty good. They have a strong cash position, which gives them the flexibility to invest in future growth, go after strategic acquisitions, or handle any unexpected economic bumps in the road.
That's crucial these days, with the business world being so unpredictable. Having that solid financial base provides a safety net and lets them be more proactive when opportunities come knocking.
It's like having a safety net that lets them pursue those ambitious growth plans without jeopardizing their overall stability. But even with all that, they're not completely immune to risk.
True. We talked about some of the potential challenges earlier, like competition, economic uncertainties, and those ever-changing regulations. Are there any specific risks tied to their financials that we should be aware of?
One thing to think about is their exposure to currency fluctuations. They're a global company doing business in many different markets, so their earnings can be affected by those changes in exchange rates.
Makes sense. They're earning in various currencies, so any fluctuations could either help or hurt their profits.
Precisely. They'll need to manage this risk very carefully, maybe through hedging or by spreading out their revenue across different regions.
We also touched on this before, but their reliance on emerging markets for growth is another potential risk. While these markets have huge potential, they can also be more unpredictable and sensitive to economic or political shifts.
Yeah, it's a classic high-risk, high-reward scenario. The rewards are definitely there, but so are the risks. They need to carefully evaluate the political and economic landscape of each market they enter and have strategies in place to mitigate those risks.
So it's a delicate dance capitalizing on growth while carefully managing those inherent risks. What about their debt? Are they taking on too much to fuel this rapid growth?
Their debt levels seem manageable, and their strong cash flow gives them the breathing room to handle it. Of course, it's something to keep an eye on, but it doesn't look like a major red flag right now.
That's good to hear. It suggests they're not overextending themselves just to chase growth.
They seem to be taking a very sensible approach to managing debt, which is another positive sign of their solid financial management.
So big picture, what's your take on Schneider Electric's overall financial health?
They're in a very strong position. They have a proven track record, a healthy balance sheet, and a management team that prioritizes responsible financial management.
That's reassuring. Sounds like they're not just focused on short-term wins, but on building something that lasts.
Definitely. Their performance reflects a company that's well-managed, strategically focused, and able to adapt to the ever-changing market.
It's an inspiring story. Makes you wonder how they're setting themselves up for the future. What initiatives or investments could shape their path in the years to come?
Well, they're pouring a lot of resources into research and development, constantly pushing the boundaries and exploring new technologies to stay ahead of the curve.
Yeah, their partial discharge detection tech and their use of AR/VR are great examples of that.
Exactly. Those are just a couple of examples of their dedication to innovation. They're also investing in expanding their global reach, both organically and through strategic acquisitions.
That makes sense. As the demand for their solutions grows globally, they need to have a presence in those key markets to really seize those opportunities.
Right, and it's not just geographical expansion either. They're also broadening their product and service portfolio, moving beyond their core offerings and into areas like battery storage and smart grids.
That's smart. By diversifying, they're less reliant on any single market or technology, creating multiple avenues for growth.
And they're not going at it alone. They're building a robust network of partners because they recognize that collaboration is key. They're actively working with other companies, research institutions, even startups, to develop new solutions and reach new markets.
That's a smart move, leveraging the expertise and resources of others to accelerate their own progress.
It's all about collaboration. And it's not just about technology and markets either. They're also investing in their people, attracting top talent, creating a culture of innovation, and giving their employees the training and resources they need to succeed in such a fast-paced industry.
It sounds like they're building a company that's primed for the future. They have a clear vision, a strong financial base, and a real commitment to innovation and developing their talent.
They're definitely one to keep your eye on.
Before we wrap up this part, there's something I'm curious about. We've talked a lot about their wins, but what are some of the potential roadblocks that could slow them down in the coming years?
Well, the growing complexity of global regulations is definitely a challenge.
Yeah, navigating those regulations can be tricky, especially when you're working in so many different countries.
Absolutely. They need to be able to adapt to these changes quickly and ensure they're compliant everywhere they operate.
That sounds like a massive undertaking, needing a deep understanding of all those local laws and regulations.
It's a big challenge, but they seem well prepared to tackle it. They have a strong legal and compliance team and a global network of experts to help them navigate these complexities.
What about the competition? We talked about the crowded market, but are there any specific competitors that are a real threat?
There are some big, well-established players in the energy management and automation space, plus a bunch of smaller, agile startups popping up all the time.
So competition from both ends of the spectrum. The big guys with lots of resources and the scrappy newcomers with potentially disruptive technologies.
That's right. Schneider will need to stay ahead of the game when it comes to innovation, customer service, and being cost-effective to maintain their advantage.
Oh, and we can't forget about the constant challenge of finding and keeping top talent. In a field that's evolving so rapidly, it's critical to have people with the right skills and knowledge to drive innovation.
Absolutely. They'll need to create a work environment that's stimulating, rewarding, and offers real opportunities for growth and development to attract and retain those top performers.
So it sounds like they're facing some complex challenges, but they also seem to have the resources, the expertise, and the strategic vision to overcome them.
I agree. They have a lot going for them, and it'll be exciting to see how they continue to grow and influence the future of energy management.
Well, we've covered a lot of ground today, from their strategic moves and financial performance to the potential risks and challenges. But there's one more piece of their story that I'd like to explore, their commitment to sustainability.
Absolutely. That's a crucial part of their story. They're not just focused on financial success. They're genuinely committed to making a positive impact on the world.
They're not just trying to reduce their own environmental impact. They're actively promoting sustainable practices throughout their supply chain and partnering with organizations that are tackling climate change and other major global issues.
It's a holistic approach to sustainability woven into everything they do.
So let's dive deeper into their sustainability initiatives and see how they're contributing to a more sustainable future. Stay tuned for the final part of our deep dive, where we'll uncover their sustainability journey and discover the impact they're making. All right, welcome back. We just finished exploring Schneider Electric's strategic moves and the challenges they face. Now let's switch gears and look at their financial performance. It's always interesting to see how numbers tell the story of a company's health and direction.
Yeah, it's like reading between the lines of their balance sheet. And in this case, the numbers paint a pretty compelling picture. Like their revenue growth, that's a clear indicator of success.
They mentioned a 20.3% increase year on year, hitting INR 11,193 crore. That's a big jump. What's driving this performance?
Well, a few things are at play here. Their focus on high-growth segments like data centers, EV infrastructure, and renewable energy is playing a big part. Demand is skyrocketing in these areas, and Schneider's positioned perfectly to capitalize on that.
Right, like we were talking about before, they seem to be pretty good at anticipating trends and positioning themselves for success.
Exactly. But it's not just about chasing the latest trends, it's about understanding what their customers actually need. They're emphasizing modernization, digital services, and remote asset monitoring, which is really hitting home with companies trying to optimize their operations and become more efficient.
So they're not just riding the wave, they're actively shaping the energy landscape with solutions that address real problems.
Exactly. And that customer-centric approach shows up in their profitability too. A 67% jump in PBT and a 32% rise in paid year on year. Those are impressive numbers. It shows that they're growing and doing it profitably, which is a key sign of a sustainable business.
That's great to hear, especially with all the economic uncertainty in the world. So many companies are struggling to maintain those margins.
You're telling me. It speaks volumes about their ability to manage costs and price their products and services competitively. And on top of that, their order backlog is up 14.3% year on year.
Oh, wow. That's a healthy pipeline.
Yeah, it suggests that this growth is here to stay. They're building a strong base for continued growth in the future.
Okay, a solid order book and revenue growth are fantastic. But what about their overall financial stability? How does their balance sheet look?
It's in good shape. They have a strong cash position, which gives them the flexibility to invest in future growth, maybe even make some strategic acquisitions. Plus, it helps them weather any unforeseen economic storms.
Right, that's so important in today's world.
Yeah.
Having that strong financial foundation is like a safety net, letting them be proactive and seize opportunities as they arise.
Exactly. It gives them the confidence to pursue ambitious growth plans without putting their stability at risk. But of course, even with a solid financial position, there are always risks to consider.
Right, we talked about some of those before. Competition, the economic climate, the changing regulatory landscape.
Yeah.
Are there any specific risks related to their finances that we should be thinking about?
Well, their exposure to currency fluctuations is something to keep in mind. They're a global company operating in multiple markets, so their earnings can be impacted by those changes in exchange rates.
Right, they're generating revenue in different currencies, so those fluctuations can either boost or eat into their profits.
Exactly. They'll need to manage that risk effectively, maybe by using hedging strategies or diversifying their revenue streams across different geographical areas.
And we touched on this earlier, but their reliance on emerging markets for growth is another potential risk factor. While these markets offer massive potential, they can also be more volatile and sensitive to economic or political instability.
It's a balancing act for sure. High rewards come with higher risk. They need to carefully analyze the political and economic climate of each market they enter and develop strategies to minimize those risks.
It's a delicate balance, capitalizing on growth while managing those inherent risks. What about their debt levels? Are they borrowing too much to fuel this rapid growth?
Their debt levels seem to be under control. Their strong cash flow gives them the ability to service that debt comfortably. It's worth keeping an eye on, but it doesn't seem like a major red flag at this point.
That's good. It sounds like they're not over-leveraging themselves just to grow quickly.
Yeah, they seem to be pretty sensible about their debt management, which is another positive sign of strong financial management.
Okay, so taking everything into account, how would you assess Schneider Electric's overall financial health?
I'd say they're in a great position. They have a proven track record, a healthy balance sheet, and a management team that seems committed to responsible financial stewardship.
That's reassuring. It doesn't sound like they're just focused on short-term gains, but are building for the long haul.
Definitely. Their financial performance reflects a well-managed company, strategically focused, and adaptable to changing market conditions.
Okay, that's great to hear. It's an impressive story, and it makes me wonder how they're positioning themselves for the future. What are some of the key initiatives or investments that we should be looking at?
Well, research and development is one area they're investing heavily in. They're pushing the boundaries of innovation, exploring new technologies, and coming up with solutions that will keep them ahead of the competition.
We already saw some of that with their partial discharge detection technology and their integration of AR and VR.
Right. Those are prime examples of their commitment to innovation. They're also investing in expanding their global reach, both organically and through acquisitions.
That makes a lot of sense. As the demand for energy management and automation solutions grows worldwide, they need to be present in those key markets to grab those opportunities.
And it's not just geographic expansion either. They're also broadening their range of products and services. They're moving beyond their core offerings and venturing into new areas like battery storage and smart grid technologies.
That's a smart move. By diversifying, they're becoming less reliant on any one market or technology, opening up multiple avenues for growth.
And they're smart enough to know they can't do it all alone. They're building a strong ecosystem of partners, recognizing that collaboration is key. They're working with other companies, research institutions, even startups, to develop new solutions and expand their reach.
That's clever. leveraging the expertise and resources of others to accelerate their own progress.
Absolutely. And it's not just about technology and market expansion either. They're investing in their people, attracting top talent, creating a culture of innovation, and giving their employees the tools they need to thrive in this rapidly changing industry.
It sounds like they're building a company that's really well prepared for the future. Clear vision, strong financials, a dedication to innovation and talent development. It's a great recipe for success.
They're definitely a company worth watching.
Before we move on, I'm curious about something. We've talked a lot about their successes, but what could potentially hold them back in the coming years? What are some of the challenges or obstacles they might face?
One challenge they'll need to navigate is the increasingly complex global regulatory landscape.
Oh yeah, dealing with those regulations can be a real headache, especially when you're working in so many different countries.
Exactly. They have to be agile, adapt to changes quickly, and make sure they're compliant in every market they operate in.
That sounds like a huge job, requiring them to really understand the local laws and regulations in all those different regions.
It's definitely complex, but they seem to have the resources to manage it. They have a solid legal and compliance team, plus a global network of experts who can help them with all those intricacies.
What about competition? We mentioned the crowded market before, but are there any specific competitors that pose a real threat?
There are a few big players in the energy management and automation world, as well as a growing number of smaller, more agile startups.
So they're facing competition from both ends of the spectrum, the giants with tons of resources, and the nimble newcomers with potentially disruptive tech.
Right. Schneider will have to stay sharp when it comes to innovation, customer service, and keeping costs under control to maintain their competitive edge.
Oh, and the never-ending challenge of attracting and keeping top talent. In a field that's constantly evolving, having a skilled and knowledgeable workforce is crucial.
Absolutely. They'll have to offer a work environment that's stimulating, rewarding, and provides opportunities for growth and development to attract and retain those top performers.
So they've got some complex challenges ahead, but they also seem to have the resources, expertise, and vision to overcome them.
I agree. They're a company with a lot of potential, and it'll be interesting to see how they continue to adapt and shape the future of energy management.
Well, we've covered a lot of ground today. Their strategic initiatives, financial performance, the potential risks and challenges they face. But there's one more aspect of their business I want to explore, their commitment to sustainability.
Yeah, that's a really important part of their story. They're not just about making money, they're genuinely dedicated to making a positive impact.
They're not just reducing their own environmental impact, they're promoting sustainable practices throughout their supply chain and partnering with organizations working on things like climate change.
It's a really holistic approach, woven into everything they do.
So let's take a closer look at their sustainability initiatives and how they're contributing to a more sustainable future. Stay with us as we unpack their sustainability journey and discover the impact they're making. All right, welcome back for the final part of our deep dive into Schneider Electric. We've talked about their impressive growth, their strategic moves, and how well they're doing financially. Now let's focus on something that's become super important for companies all over the world, sustainability.
Yeah, it's not just a trendy word anymore, it's a core part of doing business these days. And Schneider Electric seems to be taking it seriously, integrating sustainability into every aspect of their operations, from their products and services to their supply chain and even their company culture.
Right. It's not just about shrinking their own environmental impact. It's about inspiring a ripple effect across their entire ecosystem.
Exactly. They're empowering their customers to become more sustainable too, working with their suppliers to adopt better practices, and even getting their employees involved in sustainability initiatives.
I was really intrigued by how committed they are to reducing carbon emissions. They've set some pretty ambitious goals, right?
Oh, definitely. They've pledged to be carbon neutral in their own operations by 2025 and achieve net zero emissions across their entire value chain by 2050.
Wow, those are some bold targets, especially for a company working in an industry that's traditionally been a big contributor to carbon emissions.
It shows how dedicated they are to leading by example and pushing the boundaries of what companies can do in terms of sustainability. They're not just talking about it, they're actually doing it.
And it's not just about cutting emissions either. They're also focusing on things like using resources wisely, minimizing waste, and promoting a circular economy.
Right. They're tackling sustainability from all angles, like designing products that are more energy efficient, longer lasting, and easier to repair and recycle.
Smart move. By making products last longer and reducing waste, They're not only lessening their environmental impact, but they're also adding value for their customers.
It's a win-win for sure. And they're not stopping with their own products either. They're working with their suppliers to adopt sustainable practices too.
I read about their supplier sustainability program, which encourages suppliers to reduce their environmental impact and improve their social and ethical practices.
That's a great example of how they're using their influence to create positive change in their supply chain. They set clear expectations and then provide their suppliers with the help they need to meet them.
It's like they're spreading that commitment to sustainability outward.
Exactly. And it goes beyond just external partners. They're also getting their employees involved. They've built a company culture where sustainability is everyone's responsibility.
Yeah. They have employee-led sustainability programs, volunteer opportunities, and even rewards for employees who come up with innovative ways to reduce the company's environmental impact.
That's a great way to build a sense of ownership and turn employees into sustainability champions.
It seems like they're approaching sustainability from every angle: their products, their supply chain, their internal culture, even how they engage with the community.
Absolutely. They're showing that sustainability isn't just a checkbox or a marketing ploy. It's truly part of their business strategy and their values.
I think that's what's so impressive about their approach. It's not just about meeting requirements. It's about genuinely wanting to make a positive impact.
It's encouraging to see a company step up and lead by example like that, pushing the boundaries of corporate sustainability.
Schneider Electric is definitely walking the walk on sustainability. Their big goals, comprehensive strategy, and genuine commitment are truly inspiring.
They're setting a high standard for other companies in the industry, and hopefully that will inspire more to follow their lead.
It's been fascinating to explore Schneider Electric's world. Their strategic focus, dedication to innovation, strong financial performance, and unwavering commitment to sustainability. They're a company that's making a real difference.
A company with a vision, a purpose, and the drive to make it happen.
Definitely a company to keep an eye on, and their journey is far from over.
Absolutely.
Well, that wraps up our deep dive into Schneider Electric. We hope you found it insightful. Until next time, keep learning, keep exploring, and keep diving deep into the things that matter to you.